Welcome to the Blockchain Report, where we discuss all things blockchain technology, crypto assets, DeFi, NFTs, and much more. Today is your weekly news update. Jump right into the markets. See, the market cap is 1.176 trillion. Volume's just under 100 billion. Or 100 million, I'm sorry. Looking at too many zeros over here. Bitcoin dominance 38.4%, ETH 18.6, gas a little high, a little bit higher today. There's been a lot of news come out, inflation numbers and stuff. We'll get into a little bit of that, but we'll go into a little bit of the CPI data, see what it did with Bitcoin. So we got a little pump this morning. Go to the 4-hour. So this was yesterday, the 9th. I had a drop, nice little pullback in the market. You know, a lot of people were expecting this to be like a little cup and handle breakout, but no. So now we got a little pump this morning after the CPI, or just ahead of the CPI data, right when it was released. And normally you get a little cool off right here after a big pump. The volume fades. You get a little pullback, some good levels. Yeah. And hope a continuation up. We'll see. We got the daily. So we'll keep an eye on that, see how it moves. Hope we all stay green out there. Keep your stops tight. Careful for this some crazy action, but just play it smart. Going a little in the CPI. So Bitcoin jumps after core CPI for July comes in lower than expected. And Bitcoin and Ethereum jump minutes after the release of the Consumer Price Index for July. The market share of Bitcoin and stablecoins continues to fall as traders appear to be more comfortable with exposure to riskier cryptocurrencies. And talk about Ethereum's key price indicator turns bullish. So this just goes into a little bit more. So we increasingly seem to be entering a transitional period. Until recently, it was clear that most investors considered the market to be in the throes of a crypto winter, but this narrative is no longer as clearly defined. Jason Dean, an analyst at Quantum Economics, said. Dean points to indicators in the market showing a possibility of a recovery, including some soft indicators such as the Fear and Greed Index, as well as hard indicators such as volume transactions on exchanges, miner sell rates, and even Lightning Network capacity data. The Lightning Network is a platform used to process crypto transactions on the Bitcoin network, not all networks. As said, Bitcoin is still very much traded by markets as a commodity, and its price is still closely aligned with external market data. As a result, the influence of these factors can often offset asset-specific data, and that may well be what we are seeing here. And here's something about a couple more, little highlights. Since we're in this little article right here, Elon Musk sold 7.92 million shares of the company. Left him with 15% stake. Not sure. Who knows why they do all that. Coinbase sued, said misled shareholders about its public listing. And shareholder is seeking damages from 9 company executives and board members. Well, we'll see about that. All right, we'll jump into some more news. So, Chinese municipal bank issues first ever digital yuan loan using intellectual property as collateral. The unnamed recipient of a loan said that the eCNY transaction was fast and efficient. They received an equivalent of 500,000 CNY, which was $74,020 at the time of publication. As reported by local news outlet Sohu on Wednesday, the Agricultural Commerce Bank of Zhangjiagang, located in, if I'm butchering that, I'm just working on my pronunciation, located in China's Suzhou province, announced that it had issued a 500,000 digital yuan (ECNY) loan with intellectual property backing it as collateral. The loan was issued via unanimous approval by the city's consumer market regulator, financial markets regulator, and municipal offices. So I guess there's been an uptick in client invoices, decided to experiment with new borrowing method. Loan was directly released into its ECNY digital wallet. I guess it's another experiment in the country's trial program. So they don't have the digital yuan rolled out throughout the entire country. They're rolling it out in certain areas and testing it. But that's pretty interesting. More than 2.6 million users signed up for the city of Shenzhen's digital yuan airdrop. I'd like to see this too. City has 18 million residents in its prefecture level area. I guess the city said that it would be airdropping 30 million of the ECNY central bank digital currency, or CBDC, to local residents to stimulate consumer spending as a recovery measure to the country's strict coronavirus lockdown. Users who receive the airdrops through randomized lottery selection could then spend the ECNY vouchers at various participating merchant terminals on Meituan, one of China's leading e-commerce platforms. The event ran from May 30th to June 19th, attracted more than 67,000 merchants. City of Fuzhou announced that it would be airdropping 20 million ECNY to local residents. Users who pass through the KYC, Know Your Customer identification, and have a local number could then log into the Fuzhou City app and enter a lottery drawing for 100 ECNY per airdrop. Okay, so they're just airdropping their token to people. It's interesting to see. I wonder how that'll be rolled out here. If the Fed will make a lottery for people to enter. Some Voyager news. Voyager to return $270 million in customer funds, says it received better offers than FTX. Beleaguered crypto lender Voyager Digital Holdings says it has received a number of higher and better buyout offers than that offered by Alameda FTX back in July, contrary to the investment firm's continued public statements. The company has also been cleared to return $270 million in customer funds held at the Metropolitan Commercial Bank by the judge presiding over its bankruptcy proceedings in New York. In a second-day hearing presentation on Thursday, Voyager stated that it has received word from as many as 88 interested parties keen to bail out the company from its financial woes, and it is in active discussions with over 20 potentially interested parties. One of the most high-profile bids came from Alameda and FTX in July. So, yeah, here's the marketing process update. So there's 88 potentially interested parties contacted, 46 parties executed NDAs, 22 parties active in marketing process, multiple IOIs received to date. Company expects to receive additional preliminary bids. August 26th, final bid deadline. August 29th, auction, if any. The 31st, sale objection deadline. September 7th, sale hearing. That's a little... Now, I'm sure there's a... Yeah, Voyager stated that Voyager had provided sufficient basis for its claim. Customers should be granted access to the custodial account held by the bank. Not sure how much will be given back to each person. So, and I believe this is just cash. Let's see. Let's see this full conversation. What they gotta say. What they gotta say. Oh. So I thought someone said that it was going to be returned as cash, or if you had your money in cash and not crypto, then it would be safe. I don't know. Thankful I didn't have anything in Voyager or Celsius. But moving on to this, Voyager plans to resume cash withdrawals on August 11th. The accounts firm said clients with US dollars in their accounts could withdraw up to $100,000 in a 24-hour period, with the funds received in 5 to 10 business days. So if you have cash in there, I don't know if it's just crypto. Okay. Voyager can't guarantee all customers will receive. I think that's something we already went through. Yeah, that was July. Let's see. Yeah, cash US dollars. I don't believe that you can get any crypto out of that. So if you have any cash, get it off now. Coinbase stock soars on Blackrock partnership news. Shares of the crypto exchange open trading up 31% last week. And this is interesting because Coinbase is now in a partnership with, and this is a catch-22 because you have BlackRock, who owns basically the majority of this country in different assets and real estate, but they also are now involved with Coinbase, which, yeah, BlackRock's this is a kind of a sticky situation because it brings in a lot of capital, it brings in a lot of eyes and a lot more people, but it also brings the dark side of capitalism with BlackRock and basically owning as much as they can in this country so we can become their product and or their customer for life. Be nice if it was another asset management company, but we'll see how this plays into the role of price. You know, these guys got big pockets. They can manipulate these prices like crazy. So it's gonna be a lot closer to the traditional markets than ever before. Crypto mixing service, Tornado Cash, blacklisted by U.S. Treasury. The department barred its use by U.S. persons as a matter of national security because North Korean hackers allegedly used the mixer to launder stolen crypto funds. So the U.S. Treasury Department has banned all Americans from using decentralized crypto mixing service Tornado Cash. The OFAC, Office of Foreign Assets Control, a watchdog agency tasked with preventing sanctions violations, on Monday added Tornado Cash to its specially designated specially designated nationals list, a running tally of blacklisted people, entities, and cryptocurrency addresses. As a result, all U.S. persons and entities are prohibited from interacting with Tornado Cash or any of the Ethereum wallet addresses tied to the protocol. Those who do may face criminal penalties. Now, this is after a Lazarus Group, North Korean hacking group, tied to $625 million March hack of Axie Infinity. Ronin Network said that they funneled all of this through Tornado Cash. Now this can also, this is just something that they're using to make this look worse than it is. Now I'm not saying that people don't use this for money laundering, but how many people do you know that have used cash for tax avoidance, paying people under the table, buying buying, selling certain illicit substances that's not taxable? So what are they really targeting this for? Is it just because they don't want people to avoid taxes? People are going to figure out a way around these things anyway. They're going to find loopholes, and you can come at people through any means by any means necessary, but it doesn't mean you're always going to get what you're looking for. But this tornado cash, I guess there's still ways that you can get around it. I've never used anything like this, but I find it fascinating. I don't think that it should be just banned, but I can see the case for why it should be. I don't know. What are your thoughts? A little opinion news. Ethereum's merge will have several consequences for the blockchain. Ethereum will probably become deflationary as a token. Issuance decreases while the burn mechanism is maintained. And it says Ethereum plan merge and upgraded that changes it from proof of work to proof of stake. Well, a number of consequences, they said in a research report on Thursday. These include lower energy intensities, the transition into a deflationary asset, as a potential roadmap to a more scalable future through sharding. Now, as I was going through this, I found it really interesting. I never really thought about this before. So it says switching proof of work to proof of stake will reduce overall issuance by 4.2% a year and eventually becoming deflationary. This may improve the case for a token as store of value. And it also turns Ethereum into a yield-bearing asset with cash flows, the bank said, which may be interpreted as a form of revenue for the network. Having potential cash flows would allow the use of a range of valuation methods that aren't available for the blockchain right now. It could be both yield-bearing and deflationary. It is less likely to be the blockchain with the highest throughput. Given its enhanced store of value properties, it is more likely to be where a growing amount of total value locked is secured and transacted. So post-merge, Ethereum could be viewed as a relatively energy-efficient and environmentally friendly crypto asset, as energy expenditure is expected to decrease by 99.95%. Now this right here is more likely to be where a growing amount of TVL, total value locked, is secured and transacted. So you have all this stuff on layer 2s, let me go back real quick. You got Ethereum that has a certain amount of tokens. See their market cap, circulating supply. Now this grows each day, but there's going to be a time where it's going to start decreasing. With every transaction made on the network, there will be some Ethereum burned. Now this number could keep going down. There was only 20 million left. Take out that 20 million. How many people are going to be just holding Ethereum? I mean, you're going to have, in order to move stuff, you're going to need to spend some of that Ethereum, but the less and less supply we get, the more people are just going to want to keep it. So the network might not have the highest, like it said here, the network might not have the highest throughput because of that. Because people aren't going to want to be using, buying a bunch of NFTs on there, or, never mind, I take that back. They will buy NFTs, but it won't have the most volume like other blockchains might be, and even layer 2s, like Ethereum layer 2s and virtual machines. So it's something to think about. Might want to keep you some Ethereum just to hold for the long term. Vitalik says centralized USDC could decide the future of contentious ETH hard forks. So Ethereum says founder Vitalik Buterin said that centralized stablecoins such as Tether, USDT, and USDC could become a significant decider in future contentious hard forks. Buterin was speaking at the Budo Asia conference in Seoul on Wednesday. And he argued that centralized stablecoins could be a significant decider of which blockchain protocol the industry would respect in hard forks. Hard fork occurs where there is a radical change to the protocol of the blockchain network that effectively results in two versions. Usually one chain ends up being the preferred over another. So at the moment of the merge, you will have two separate networks. And then you have exchanges, you have oracle providers, you have stablecoin providers that are kind of deciding in a way which one they respect. Because at that point, you'll have 100 billion of USDT on one chain, 100 billion of USDT on another, cryptographically. And so they, Tether, need to stop respecting one of them. However, Buterin stated that he has not seen any indication that such a contention would be an issue in Ethereum's upcoming merge, noting that centralized stablecoin is more of a concern for future hard forks. So this is interesting to think about. There's so many things that go into moving the network from the development phase, the test phase. It's a lot. The staking, DeFi, and yeah, there's just so much. I'm not a coder, but I've seen some of the code that goes into all this. It's crazy. It's crazy. You really have to think of so many things, and if you have a wallet or something that's on a test network and you send funds to the test network and be lucky to get them back, it's wild. It's wild. I find it fascinating that they just come up with such amazing technology. It's really cool. I hope they have a seamless fork, because Cardano, I know they're a long ways away, but they're coming. They're coming fast. White hat hackers have returned 32.6 million worth of tokens to Nomad Bridge. So the cross-chain bridge was drained of assets in less than 3 hours. And yeah, the vast majority of funds consist of stablecoin, USDC, USDT, Frax, along with altcoins. The vulnerability of Nomad protocol was highlighted in Nomad's recent audit by QuantStamp and was deemed low risk. As soon as the exploit was discovered, members of the public joined the attack by copy-pasting the initial hack transaction, which was akin to a decentralized robbery. More than 190 million worth of cryptocurrencies were drained from Nomad in less than 3 hours. The attack came just 4 months after the project raised 22.4 million in a seed round in April. Wow. The attack took advantage of a wrongly initialized Merkle root, which is used in cryptocurrencies to ensure that the data blocks sent through peer-to-peer network are whole and unaltered. A programming error effectively auto-approved any transaction message to be valid. So that's, if you're gonna do this, man, it's kind of shitty. I guess it's a way to get you some money. We're in a recession. Things are hard. Times are tough for a lot of people. But there's a better way to do this and steal other people's money. Can you imagine not just like doing this and taking the money, but forgetting that it can be tracked to you and you don't put it through a mixing service and you're like, oh, this will be cool. I'm fine. Nope. Gotcha, bitch. Well, hope that the other 157.4 Wow. Yeah, that's crazy. Gotta keep your stuff safe. Although when you got a protocol that can't keep it safe for you, I think it's shitty that they actually went into the audit and exploited the hack. Wow. People are getting good. People are getting really good. Last little bit of news. Ethereum users flock to Optimism for Aave liquidity mining launch. Optimism getting a lot of love. Users lending and borrowing assets on Aave through Optimism's Layer 2 chain can now earn additional OP token rewards. So OP token liquidity mining is now active on the Optimism version of Aave. Since the update went live, deposits to Aave on Optimism have increased almost 500%. The liquidity mining program has also helped push Optimism's total value lock up over the 1.5 billion. So Optimism launched another round of token rewards. So Layer 2 Network announced the start of its latest liquidity mining program Thursday, calling the OP Summer. The project has allocated 5 million OP tokens to DeFi lending giant Aave for distribution to its users over the next 90 days. Since the update went live, users have bridged hundreds of millions of dollars of tokens to Optimism and deposited them into Aave to earn additional OP tokens. According to DeFi Llama, Aave deposits on Layer 2 network have increased 493% over the past 24 hours. At press time, Aave V3 on Optimism has just under 420 million worth of assets locked on its smart contracts. While Aave liquidity mining program is the largest on Optimism, so far it is not the first. Since Ethereum rollup launched its native OP governance token in May, several other protocols have begun distributing incentives. Among them are automated market maker Velodrome, the decentralized swaps app Perpetual Protocol, and the sports betting app Overtime Markets. And Optimism been killing it. It's one of the leading Layer 2 projects working to scale Ethereum. Use optimistic rollups to bundle transactions together and send them back to Ethereum mainnet for confirmation. Rollups like Optimism offer users substantial gas savings compared to transactions on mainnet. And I was listening to someone talk the other day about the ZK rollup versus optimistic rollups, and they're saying ZK rollups were much better. So let's check this out real quick. Rollups process transactions off-chain, primarily on a rollup specific chain, and then batches, compresses, and delivers the transaction data to the main Ethereum chain. So let's see. What is a rollup? They process transactions off-chain. Yep, just like I said earlier. Rollups are a scaling solution for Ethereum that work by taking transactions off the main blockchain where they are processed. Snarks are then sent back to the main blockchain as verification. ZK rollups, smart contracts that expand the network by executing numerous transactions off the main blockchain. They function by aggregating or rolling up hundreds of off-chain transfers into a single transaction. It then returns to the main chain with the snark short, non-interactive argument of knowledge as evidence of validity. This ensures that instead of hefty transaction data, only the validity proof has to be kept on the main chain, making ZK rollups faster and cheaper way to confirm transactions. Okay. Okay. So optimistic rollups presume that the transaction data sent to Ethereum network is true and legitimate. When an invalid transaction is spotted, the network should cancel the transaction and penalize the party responsible. Optimistic rollups do this by implementing a dispute resolution mechanism that can validate fraud proofs, detect fraudulent transactions, and dissuade bad actors from submitting more invalid transactions or wrong fraud proofs. So the speed of on-chain processing is a fundamental benefit of zero-knowledge ZK rollups over optimistic ones. ZK rollups are recorded to the underlying blockchain ledger faster than optimistic rollup transactions, since there is no waiting period during which the transaction's legitimacy might be questioned. So ZK rollups they do everything off-chain and then send it back on-chain, where optimistic will just have they have, the dispute resolution mechanism. So that can be a little bit laggy. So I guess that's why the ZK rollups. But it's good to have these different technologies, though. They can definitely help decongest the network and allow availability to move your money around to different networks. Like if you didn't like Ethereum, but there was only Bitcoin and Ethereum network, you didn't really have a choice. And now there's Cardano, there's Avalanche, there's Solana. No, not Solana. Don't use Solana. Polygon, Phantom, a bunch of different networks that you can move your money around to. And some of them have cheaper fees. Some of them are a little higher. But it's good to have variety. It's good to have variety. But one quick last look at the markets. Let's refresh this a little bit. Let's see what we got here. We're just still hovering around. Yeah. We'll keep an eye on this over the week. But that's all I have for today. Appreciate y'all tuning in, listening to me ramble. It's been fun. But y'all have a great day. I'll catch you on the next one. Peace.